Have you ever stopped to look around and wonder why some people seem to attract wealth effortlessly, while others work 50, 60, or 70 hours a week, yet barely scrape by? Welcome back to the channel. Today, we aren't just summarizing a book. We are breaking down a financial philosophy. We are talking about Robert Kiyosaki's legendary book, Rich Dad, Poor Dad. Since its publication, this book has fundamentally shifted how millions of people view money, debt, and the traditional path of going to school just to get a good job. The entire premise rests on Robert's childhood in Hawaii, where he was heavily influenced by two different father figures. His biological father, his poor dad, was highly educated and a hard worker, but struggled financially his entire life. His rich dad, the father of his childhood best friend, never finished the 8th grade. Yet, he had incredible street smarts and became one of the wealthiest men in Hawaii. Growing up, Robert noticed a stark contrast. Poor dad would say, "I can't afford it." Rich dad would ask, "How can I afford it?" One statement shuts down your brain. The other forces it to work. Today, we are going to dive deep into the 6 core lessons Rich Dad passed down. Let's get right into Lesson 1. Chapter 1. The rich don't work for money. Lesson number 1 is the most famous concept in the book. The rich don't work for money. If you're hearing this for the first time, your immediate reaction might be, "Well, that's ridiculous. Everyone works for money." But let's look closer. Kiyosaki introduces a concept he calls the rat race. You wake up, commute, work all day, get a paycheck, pay your bills, and wait for the next paycheck to do it all over again. Why do we do this? Kiyosaki argues that the middle class and the poor are driven by two incredibly powerful emotions: fear and greed. The fear of not having enough money gets us out of bed and into a job we might not even like. We think a paycheck is the cure for that fear. But then desire takes over. Once you get that paycheck, you think about the new car, the nicer apartment, or the vacation. So, you spend the money. When you get a raise, you just buy more expensive things. This cycle is fueled by fear and desire, and no amount of salary increases will ever get you out of it because you are still trading your time for dollars. Rich Dad taught Robert a different approach. The poor and the middle class work for money. The rich have money work for them. Instead of seeking a safe paycheck, the wealthy spend their time acquiring assets that generate cash flow, whether they are working or sleeping. Chapter 2. Why teach financial literacy? This brings us directly to Lesson 2, and honestly, this is the most important concept in the entire book. It's all about financial literacy. Kiyosaki drops a hard truth here. It is not about how much money you make. It is about how much money you keep. And the only way to keep it is to understand the crucial difference between an asset and a liability. Forget the complicated accounting definitions. Here is the simplest explanation you will ever hear. An asset puts money into your pocket. A liability takes money out of your pocket. That is it. Poor people buy expenses. The middle class buys liabilities that they falsely believe are assets, like a massive house with a huge mortgage, or a brand new car that depreciates the second it leaves the lot. These things drain your bank account every single month. The rich, on the other hand, buy true assets. They buy real estate that generates rental income. They buy dividend-paying stocks, bonds, and intellectual property. If you want to be rich, your life's mission must be to build your asset column. Once your assets generate enough income to cover your living expenses, you are officially out of the rat race. You are financially free. Chapter 3. Mind your own business. Lesson 3 is mind your own business. Now, this doesn't mean you should be nosy. Kiyosaki is pointing out a sad reality. Most people spend their entire lives working for everyone else's business. You work for the company owner, you work for the government through taxes, and you work for the bank through your credit cards and mortgage. Kiyosaki isn't telling you to quit your day job tomorrow. Keep your day job. Work hard, but start minding your own business on the side. Your profession is what pays your bills, but your business is your asset column. So, take the leftover money from your paycheck and start funneling it into investments. Start a side hustle. Buy a vending machine. Invest in an index fund. Keep your day job to fund your life, but build your business to fund your freedom. Chapter 4. The History of Taxes and the Power of Corporations. All right, let's talk about the thing nobody likes, taxes. Lesson 4 explores how the rich play the tax game on a completely different difficulty setting than the rest of us. Here's the financial reality of the working class. You earn money, the government taxes that money, and then you try your best to live on whatever is left over. The rich use the power of corporations to flip this script. And remember, a corporation isn't necessarily a massive glass skyscraper with 1,000 employees. Often, it's just a legal document sitting in a lawyer's filing cabinet, but it provides a massive legal shield. The corporate tax structure works like this. A corporation earns money, it spends everything it legally can on business expenses, and then it only gets taxed on whatever is left over. This is not about doing anything illegal. It's about utilizing the rules that are already written into the tax code. Financial IQ isn't just about making money, it's about understanding the law well enough to protect the money you've made. Chapter 5. The rich invent money. Moving into lesson 5. The rich invent money. Kiyosaki believes that every single person has immense financial potential, but self-doubt and a lack of financial education hold us back. In the real world, it's rarely the smartest people who get ahead. It's the boldest. Financial intelligence allows you to see the opportunities that everyone else walks right past. Kiyosaki shares incredible stories of how he put together lucrative real estate deals using almost none of his own money. The major takeaway here is that money isn't just physical cash. Money is an agreement. It is an idea. If you train your mind to understand markets, spot undervalued properties, and negotiate effectively, you can literally create wealth out of thin air. You stop saying, "I can't afford it," and start figuring out how to structure a deal so that you can. Chapter 6. Work to learn, don't work for money. Finally, we arrive at lesson 6. Work to learn, don't work for money. If you are young, or if you are looking to change careers, this is vital. Do not just take a job because it offers a high starting salary. Take a job based on the skills it will force you to learn. Kiyosaki recommends learning a little bit about a lot of things. In the corporate world, people are taught to hyper-specialize. But if a specialist's industry collapses, they are out of luck. Instead, Kiyosaki urges you to learn broad, fundamental skills. Learn how to sell, learn marketing, learn how to communicate effectively, negotiate, and manage people. These skills are bulletproof. The ability to sell, whether it's a product, a service, or just selling yourself during an interview, is the ultimate baseline for building wealth. Work to acquire skills, because skills compound over time much faster than a standard paycheck. So, to wrap it all up, Rich Dad, Poor Dad is much more than a book about real estate or stocks. It is a book about taking control of your mind. It's about overcoming the fear, laziness, and arrogance that keep people trapped in the rat race. Your mind is your single most powerful asset. Invest in your financial education. Buy real assets, mind your own business, and make your money work for you. If you haven't read the full book yet, I highly recommend picking up a copy. It is a classic for a reason. What was your biggest takeaway from these 6 lessons? Are you currently stuck in the rat race, or are you building your asset column? Let me know down in the comments below. If you found this summary helpful, please hit that like button. Subscribe to the channel for more deep dives into the best books out there, and I will see you in the next video.